Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Wednesday, and we're at the 17th of November, 2021. Before we get going, remember, tomorrow we're going to have the live webinar. I will open it at 12:15 p.m., start it promptly at 12:30 p.m., that is Central Time. The invites have been sent out. You need your password, your invite in order to get in. You'll get everything from there. How do you get it? Well, if you haven't gotten the mail by now, you're probably not on my mailing list. Just take your cursor, come up here. As you move it, you'll see an icon. Click on that icon, fill out the form, and away you go. You'll get the confirmation and everything you need. I do not post these as recordings. You either come or you miss it. It's really that simple. Don't write me afterwards that you had a question. Here, could I answer it for you? I won't. I want you to come into this. Pretty simple. Not asking much out of it. Now, Tesla today. What did Tesla do? Well, if you take a look, Tesla's come back up a little bit. Could Elon Musk be through selling? He just might be. You know, he sold about $9 billion the last I had heard of stock. So we'll see if that was it. And if it was, you've taken the pressure off the market. So he was the reason it came down. If he stops selling, market's got to take another look and decide, what is Tesla worth? What kind of company is it? What's it worth? You know, I'm watching Rivian and Linn and all these other car companies. They're worth more than GM. They haven't produced cars. So this doesn't last, okay? I've seen this story. This doesn't last. You get into all this hype. Everybody's looking for the next Tesla, the next whatever, Bitcoin. You know, I wish you the best with it. You got to still make money at the end of the day. All right. We then talk about the Fed, and that's going to be a big event the next 2 days because President Biden is ready to announce whoever he's going to pick. Now, the reality is, from my perspective, if he just wants to put his handprint on everything, then he's going to change Mr. Powell for somebody that's Mr. Powell. Ms. Brainerd and he are so similar. She's a little tighter on, I think, bank regulations, but that's about it. Everything else is so similar, you're not doing much, so that could be the handprint he wants. At the other hand, I think Mr. Powell's done a fine job. It's not like he's going from Mr. Powell to somebody radically different. They're the same, very, very, very similar from everything I've read. Do I know the two? No, but that's what I've read. What he can do is leave it as is and then fill all the other seats, and he's still got his handprint on it. So it's a very hard call to know what it is going to be. If it weren't either of those, and there's a name that comes like Larry Summers out of left field, oh my God, the market wouldn't be ready for that one. I'm not saying that'll be the case. Bonds and notes, I think, got to the point where they're oversold, and now with this uncertainty, they might get a little bit of a rally in them, so I'd watch that. Every day you wake up, it's the inflation story. I was looking at tonight's Chicago Tribune, and they're tired of hearing the word transitory, so they're giving a definition going back to the 18 and 1900s in the opinion column. I read like a madman, obviously, so you watch all that. It is transitory, I think, but we'll find out. If it's not, well, the Fed got it wrong at that point. When we look at Teslas, I pointed out there's a gap here, but I very clearly said it does not have to make a fill of that gap. That could stay in place. The reason you'll see in a moment. The break with today's action has run its course. That doesn't mean you can't go lower, but this surge to the downside by taking out this high ends that. So now you go into more of what I call a professional mishmash. And why do I think the market doesn't have to fill the gap? Because it's decided to come back to the 18-day average of closes. It's going for a home. Now you've got to get the news that makes the market move, and we'll see what happens. But the news has been stellar because they're producing more cars. When you look here, you can see what you rallied back to, the resistance of the 18-day average, and the market's now starting to move the other way in momentum, where it's trying to turn itself back to the upside. When I come to Apple, I told you that I think Apple's dangerous to trade here. You came down, and the market held the lower bands. You went up, the market's fighting at the upper band. Now, to prove me wrong, which I'd love to be proven wrong, you need another close that is very strong tomorrow over Today, number one, you got to take out today's high. Number two, you got to close higher on the day and in the top quadrant. Then I'm going to say to you, I think a base is formed where this market can now enter another level to the upside. Could be that the market's looking at Christmas right in front of us. The Apple Watches are there. They're promoting them like mad. They're cool. I went and looked at a bunch of them myself. When I got back from Mexico here, I had my battery replaced in my phone. I am not ready for the iPhone 13. I'm still on an old X1, but I'll move to the 14 because of everything I've been reading. That's where the changes are really supposed to happen that I want. Camera freaks and battery freaks are probably on the 13s. Question is, can you get them? On ARC, what we have here is a market that's just sort of stuck. It still has momentum to the downside. It is oversold. Is it going to challenge this lower band again? I don't know, but it's got 3 layers of resistance, and there's nothing on that chart that's pretty bullish or bearish to trade off of. Not that I see. I'm sure you see something different. XLI, higher lows, higher highs, overbought. Telling my traders, nah, I don't think there's much to do there. The semiconductors, I'm still very bullish. They're still embedded reading. You got to get this number under 79 for me to say, okay, the momentum's out of the upside. It's probably going to correct. Till that happens, you still have a target of 254. Remember when the market was down here in October before I took off for my beautiful vacation? And we were getting down here, and I was saying, you don't want to be short markets that they have a 2-year book, they have pricing power, and there's more demand coming in. Belvidere, Illinois, yesterday, the Jeep Cherokee plant had to be shut for a lack of, in part, getting the chips. Now, demand hasn't been great for the Cherokee, but it's also the chips. I read all the stories, what they're saying. I see what's going on. How are you going to open up these new plants that GM is showing off in everybody and build a car when you don't get these chips? That's another problem. That's what gives Tesla an edge on so much, how they integrated and they built so much of their own product. CNBS, you're back into the support. Now, if you take out 1802, I had mentioned that yesterday, you end this bullish pattern. So when the bulls came out, and I think they did here, overbought, first challenge of a Bollinger Band, that's what I teach in my enhanced course on Bollinger Bands, you pulled right back there. Now you're neutral again. The home stocks, well, they're not paying attention to today's news. Today, when we looked at it, we got the permits and we got the starts. The starts were ugly. They were down 0.7%. They were looking for an increase of 1.6, but the permit number doubled what they thought it was going to be. That's so weird. I can't put 2 and 2 together there, but the market is just saying, don't pay attention to it. We're embedded. We're looking good. Everything's just fine, Ira. Next, energy. I don't like any part of this. You're just in a sideways action where you get chopped. It makes you trade wrong. It's making you sell a rally to go short and buy a break to get long under or over the 18-day average. No, let somebody else do that. I don't want to break into that. Emerging markets are at a point where they need to consolidate again against this. Here's what the market did. It had been breaking down. Let's see if I can get it to move. I don't know if it wants to on me. Let's see. Yeah, there we go. Okay. The art of these things. We all hate them. If you watch the weather people, they hate them too. You come down, you based out, then you had to come up and fight the 18-day average of closes. You get through it. The next zone that you're going to fight's the 100-day average. So it's doing that, and it needs to consolidate itself, because if it can clear that, then the upper Bollinger Band's the next part of the story. It also got overbought, so it used up its energy, and it needs a snack bar. It needs to get something that's electrolytes, everything going again. So that's what the market's in need of right now. When we take a look at gold, inflation, it's here. We see it, you see it. Go to the grocery store. Go to buy something, buy your kids a toy, see what's going on. Prices are up because you can get more money for it. Now, you get to the firms like Target and Walmart, they're doing their best to eat as much of those price increases to keep their clients as they can at the expense of their bottom line. The margin on profit, they're not going negative. Their margins, though, they're shrinking them. They're being smart, trying to play, this is a big season, let's get the sales done, we'll get whatever we can, and we'll deal with these supply chain issues after Christmas. Brilliant. That's what I think. We get to the gold miners, though. It's not as strong yet as gold. It's working on it. Do we have an embedded reading in GLD? Well, you've been working on that. That's why these breaks, in my opinion, continue to be solid buys. Now the miners are saying, okay, you know what's in the ground here? I got all that gold. Well, if it's going up to 1,900 an ounce, why are you leaving me behind? So the key to know that you got something going, you had an outside day down on Tuesday. Today you had an inside day. If you take that out, you're probably going to make a solid run at that upper Bollinger Band. That would be my thinking. And in the process, might we embed? So the market's got both numbers over 80. Yesterday they were both over 80, and the day before. My gosh, they're there. That's why I'm friendly. Lose that reading with the 79, I'll change my opinion. Copper. Read about all that's going on negative in COVID. You're not going to get everybody in these plants. You got supply chain issues. You got COVID issue. You could back off here. Plus, and I was telling you this recently, said I read enough over the past 3 weeks that I am convinced supplies of copper are going to be very ample. Price brought supply to the market. Mining companies paid higher wages. They could do it. They've got plenty of room in these margins to do it. So to get this market to suddenly say it's not the same game as it was there, I buy into that. Not bearish. I want to make that ultra clear. I think we're in a chop period where we're looking for price value, and I think we'll stay that way for a bit. TLT, I don't know. It's going to be very hard to get through this 143.66 to 74 level. You've already used a lot of energy down here. I think the market's ripe to come back to the 18 and the 100-day average and play around that zone for a little bit. It's got an overall bearish pattern, though. FXE, I told you it's time to go to Europe. Today you got under 113 in the euro. Can you believe that? But who's going there with COVID as bad as it is? And it's a massive breakout. If you get my written newsletters, I showed a chart this morning as to the prior peak of COVID throughout the different countries in Europe and where they're at now. They're back to where they were. So it's very ugly. That's a problem. You don't want to go to spend your dollar for that €1.13. And you're getting really extended. Now, you closed today at 105.38, just over the Bollinger Band of 105.34. How many days did we have down prior to this? Let me see if I can tell you. 1, 2, 3, 4, 5. So you had 5 days in a row down. My stake dinner bets are you won't go beyond 5 on the lower Bollinger Band. And today, I would have won that stake, which I'm going to have tonight. For real. Now, I want to be your go-to guy for these ETFs stocks in charting analysis. Why? I think that my knowledge of the futures market, especially with my combo subscription, gets you set in the morning at 5:30 what's going on there. And you know, as I do, that many, many, many of the different indices, ETF spiders rely on the futures markets. So I start you off there, and about 9:05 in the morning, I start recording my Spider ETF video. You're going to get 40 charts on futures in a video, so I'm talking right over them. Forget this writing. That's old-time stuff. This is so much easier to do, and about 40 in this. Technical analysis, news of the day, trying to give you confidence in your own trades, showing you what I see, where I see it. You decide, gee, I like that. That's what I've been looking for. Give it a try. It's not expensive, folks. You're paying 0 commissions on your ETFs. Pop $1. It's $16.90 for 48 videos in a month. Tell me where you're going to get that kind of knowledge. And I think I'm one of the better chartists out there, along with specific buy here, sell there ideas. How do you do it? Just go to the website, look under the word research, and you take it from there. I'm Ira Epstein. You have a great day. I want to see you at that webinar tomorrow. Remember, you can click up here at any time, move your cursor up. That's how you register. Have a good day.